Welcome back to another By the Numbers, where we take a deep dive into market affordability. We're going to show you real properties and give you real solutions. So today we're going to take a look at this listing from Zillow, 1135 Old Charlotte Road Southwest, Concord, North Carolina, 28027, list price of $375,000. Listing is provided by Brian Bain of Keller Williams University City. The details, the link can be found underneath the picture, but it will also be posted in the description. Again, this is a listing found on Zillow, and we're going to break down some numbers to make this property affordable. So today we're going to go over three different key aspects. What it looks like if you were to just offer full asking price of $375,000, and we'll break it down by loan type, conventional, FHA, VA. And then we're going to look at if you were to ask the seller to reduce their purchase price by $20,000. So reducing it from $375,000 to $355,000. And then finally, we're going to look at what it would be if you asked the seller for some concessions, and we use those concessions to buy down your interest rate. So let's take a look first at what the numbers look like with full asking price. Now, we used a credit score of 740, and all of these are going to be conforming loan. Well, they're going to be 30-year fixed rate mortgages based on a 740 credit score. And when I pulled these interest rates, is based off of Friday night. So things change rapidly. So these are just for educational purposes only. So when we take a look at the full asking price, we're going to break it down by what's known as PITA, your principal, interest, taxes, and insurance going forward, and break it down by all aspects of what it looks like. So for this particular scenario, we are using a first-time home buyer with 3% down using conventional loan. So let's just break it down. $375,000 purchase price, loan amount $363,750. 30-year fixed rate mortgage came in at 6.5%, giving you $11,250 for your down payment. And anytime you put down less than 20%, you need mortgage insurance, and that came in at $264. Looking at an FHA loan at full asking price of $375,000, you are looking at a loan amount of $361,875. 30-year fixed rate mortgage came in at 5.75%. Your down payment would be $13,125, and your mortgage insurance, your PMI, would be $166. And turning our attention to VA now, $375 full asking price, zero down payment because it is not required with VA if you qualify. 30-year fixed rate mortgage came in at 6.125% when I ran these numbers, and they do not require mortgage insurance either. Okay, so what does a full price monthly payment look like? Well, when you look at your conventional loan, here's where we're going to break it down by the PITA, the principal, interest, taxes, insurance, and anything less than 20%, you have mortgage insurance, and we'll add that PMI in there as well. So for conventional loan, $515 going towards your principal, $1,784 going towards interest, $373 for your combo of HOA, PMI, homeowners insurance. We didn't get real deep into these numbers, so these are very minimal. Mostly it's going to be your PMI and a homeowner's insurance. So we did not put in an HOA in this particular scenario. $281 for your taxes, giving you a grand total of $29.53 for your monthly mortgage. FHA came in at $562 going towards principal, $1,550 going towards interest, $275 for your combo, and $281 for taxes, rounding that down to $2668. And then finally with your VA loan, $556 going towards principal, $1,722 going towards interest, $109 for your combo, and then $281 for those taxes, giving you a grand monthly payment of $2669. All right, so if we ask the seller for a price reduction of $20K, this is what that scenario looks like. Again, your purchase price of $355,000, your loan amount would be $344,350. 30-year fixed rate mortgage came in at 6.5%. Your down payment was $10,650, and your mortgage insurance came in at $250. Moving on to your FHA, 342,575, 30-year fixed rate mortgage came in at 5.75%. Your down payment was $12,425, and the PMI mortgage insurance is $157. And then finally, your VA loan, $355 full purchase price, or $20,000 reduction. So your loan amount $355, zero down payment is not required if you qualify with the VA. 30-year fixed rate mortgage came in at 6.125%, and that is zero mortgage insurance as well. And your payment, well, this is what it did to your payment. So looking at the conventional loan, $487 going towards your principal, $1,689 towards that interest, $354 for that combination of the HOA, PMI, homeowners insurance, and $266 in taxes, giving you a monthly payment of $27.97. Moving on to your FHA, we're going to do $532 going towards principal, $1467 towards interest, $261 for that combo, and then $266 for taxes, giving you a monthly payment of $25.26. And then finally, your VA, $526 going towards principal, $1631 going towards interest, $104 going towards that combo, and then $266 going towards taxes, giving you a monthly payment of $25.27. And finally, we're going to look at seller concessions, where the seller will pay for a price for an interest rate reduction for you, and we're going to show you that breakdown. So we call it a seller funded buy down. So on a conventional loan, we'll go back up to that original list price of $375,000. So with that 3% down, we're looking at a loan amount of $363,750. 30-year fixed rate mortgage came in this time at 5.5%, buying it down with 2.375% in points, or $8,639, giving you a $264 mortgage insurance, and that down payment came in at $11,250. Moving on to your FHA loan, again, back to that original list price of $375,000. Your loan amount would be $361,875. 30-year fixed rate mortgage came in at 5% on this one, buying it 2.139% in points, or $7,741. Your down payment $13,125, and the mortgage insurance at $166. And finally, VA, that purchase price of $375,000 is the exact loan amount. 30-year fixed rate mortgage came in at 5.25%, paying down 1.456% in points, or $5,460. Zero down payment if you qualify, and then zero for mortgage insurance. And now let's look at the payment. What your monthly payment would look like. $582 going towards your principal for a conventional loan, $1,483 for that interest, $373 for the combination, and $281 for taxes, giving you a grand total of $27.19 a month using seller concessions. Moving on to that FHA loan, $614 going towards principal, $1,329 to interest, $275 for that combination, and $281 for taxes, giving you a grand total of $24.99 per month. And finally, your VA comes in at $618 for that principal, $1,453 for interest, $109 for the combination, and then $281 for taxes, giving you a monthly payment of $24.61. So a lot of numbers were thrown at you. So let's look at the side-by-side comparison so you can really gauge what this does for you. Starting with that conventional loan, we're going to look at full asking. Obviously, there's going to be no savings there. Your monthly payment would have been $29.53. If we ask for a $20,000 reduction in purchase price, we're going to subtract that the full asking price payment, $29.53, from the new payment, monthly payment of $27.97, giving you a savings of $156 a month with a reduction in price of $20,000. Now we're going to look at seller concessions and using those concessions towards buying down your interest rate. Original monthly payment would be $29.53. New payment, $27.19, giving you a savings of $234 if we ask for seller concessions versus a price reduction. Pretty substantial savings if you ask me. Moving on to the FHA loan, we're going to take a look and see full asking $2,668, which would be your monthly mortgage payment. We're going to take that amount. If you ask for a $20,000 reduction, your payment would be $2,526, giving you a savings of $142 a month. And then those seller concessions, again, we're going to use that same full asking price, $2,668. We're going to subtract the new payment of $2,499, giving you a monthly savings of $169 a month. So again, substantial savings, and $20,000 reduction is a lot, but if you notice, the amount that we asked for seller concessions was nowhere near. So it's a win-win for both parties. And then finally, we're going to look at this VA pricing. $2,669 would be your full asking price monthly payment. Subtracting the new payment of $2,527 gives you $142 a month in savings with a $20,000 price reduction. And then those seller concessions, we're going to do the same, $2,669 for that original payment, $2,461 for the new payment, giving you a monthly savings of $208 a month. In conclusion, seller concessions wins the game. In this market, in this buyer's market, let it do the work for you. Just because you think a price reduction is the way to go, the math does not lie. You can see clearly that asking the seller for concessions and using those concessions towards buying down your interest rate will give you a bigger bang for your buck and make things more affordable. I hope you enjoyed this lesson. If you have any questions, drop a comment below, send me a message. All of my information can be found in the details in the description. Look forward to hearing from you. Thanks. And for all of you agents and loan officers out there, check out our agent growth classes. We have classes such as ChatGPT and AI for your real estate business, Instagram Reels, hooks and scripts, embracing the shift, all these to help you grow in 2023 and beyond. If you're not interested in any of those courses, check out this section. This is our education courses. We have things such as seller-funded buy-downs, how to use gift funds to sell more properties, credit issues, facts versus fiction, and then things like simplifying condo financing. If any of these ring a bell, go ahead and scan that QR code to the left side of your screen and set something up.